welcome on board Jonathan, who is the Deputy CIO of Westminster Asset Management. Hi, Jonathan. Thank you so much for taking the time out and speaking with us. The big event that the world is eyeing is indeed the Trump 2.0 and the likely impact that everybody is looking forward to. Help us with your understanding that how do you see when Trump takes in charge, how the equity markets can react, because for now what we are seeing is there is indeed a little bit of nervousness. The bond yields are shooting up and there are some concerns on the rate cuts as well. So help us with your take on the markets. How do you see the global markets and the Indian market setup as well?
Yeah, hi, good morning. I think it's, clearly we're all struggling with what Trump 2 will actually look like. There's clearly, we're going through a phase of a lot of volatility and, a lot of people are predicting certain things. One thing we know is, that not all these predictions will be correct. I think, the way we look at it, markets had got a little bit excessively pessimistic, I think, certainly on the bond yield front, where you saw US yields rising up. We've got US mortgage rates now near 7%. And I think that's probably in the very short term a little bit too pessimistic. We are, though, somewhat concerned about the inflation outlook for later on in the year in the US, and that will have an impact on bond yields. But clearly, as you rightly say, none of us really know about the incoming president's policies with regards to tariffs, with regards to the dollar. He's talked about he wants a weak dollar. And certainly, obviously the ongoing sort of anti-Chinese talk, is that going to be really true? So there's still a lot of uncertainty. Clearly, what we do know is it will be different from his first term. The market setup is very different from when he came in previously. Rates are clearly higher, inflation is higher. So it's a very different setup from when he started the last time round. But I think all in all, we remain actually reasonably optimistic for equity returns, certainly in the first half of the year, although we do believe they will be volatile. And markets like India and emerging markets, certainly have come under some pressure for the last few months. We've certainly seen money coming out of the space. Obviously India peaked out quite a few months ago. People are increasingly allocating into the US. That said, we certainly maintain decent positions in the likes of India and other emerging markets, because we do believe that the longer term structural story is still at play. And we do believe that ultimately investors will begin to switch back their focus on some of the other areas outside of the US.
Jonathan, is there anywhere in India wherein you may have added positions or, booked out in the recent correction which played out?
We've not been very active for some time. I think it's interesting, seeing what happened overnight in the IT space, with Infosys and stuff. Seems a bit of an overreaction to us, but I think it's probably a reflection of a sector that's done pretty well in the current sell-off and a bit of profit booking coming in. But otherwise, no, we're fairly consistent in where we're invested, be it in the banks, be it in some of the IT plays, and also very select consumer plays.
All right, but having a look at some of the movers in today's trading session, then a good rebound is what you're seeing in stocks like BPCL and HPCL, at least. And specifically for BPCL, yes, indeed, there's a news flow. But Naresh, just wanted a chart check on this one, because this whole energy and the power theme is doing well. But how do you see BPCL placed at this point? This perk up of almost 2.5%. Anything much to read on, or just a bounce from the lower levels and no fresh rate initiation?
So for now, the correction has lasted long in this space. So if you look at BPCL from 370, 380, the stock has corrected to 260 levels. This is where it was in February as well as in June. So at these levels, the correction is overdone, could expect a bounce back. But the bigger trend starts once it sustains back about 290, 300. Same is the case with IOC as well as Hindustan Petro. They've seen a correction of 20 to 30% from the top. And crude prices have remained at the same place for the last 3-6 months with a lot of volatility. But at these prices, it's a good risk reward if one has a longer term view.
All right, that's the take coming in on BPCL. But even some of these beaten down names like Asian Paints, they're also seeing a decent perk up. But talking about metals, just a while back, we were having a word with Aditya on Hind Copper as well as some of the other metal plays like Tata Steel, and they are seeing some good rebound in today's trading session at least. But one such stock is also Macrotech Developers, because today there was indeed a brokerage upgrade coming in on this one by Kotak Securities, while they have maintained their target price on this one. But Aditya, help us with the chart check on Macrotech Developers. A lot of these investors have been highlighting that real estate is still a good play to bet on, but technically, how do you see the stock placed?
Like we discussed this in the morning, Shrishti, I think 1200 is a resistance zone for the stock. I would wait it out for this 1180, 1200 zone to be taken out decisively. If that is taken out decisively, then yes, I would look to initiate fresh long here for a target of 1300 on the upside with the stop loss at 1150 on the downside. I think right now it's better to focus on areas where there's more momentum, like your defense, like railways. I think this is one space which is seeing good traction on the upside and likely to continue in the coming trading sessions as well.
We're on the subject of real estate right now. Let's try and understand what exactly is the visibility, at least when it comes to the MMR region. And we've got Astha Chopra, my colleague, who's currently in conversation with Baman Irani from Keystone Realtors. Let's hear out what he has to say.
Already, met with Revenue Secretary and put forth our requests for the real estate industry. Of course, other than streamlining GST and making it a little more friendly for the pockets of our purchasers, we've asked for putting a lot more money in the hands of our purchasers itself. Real estate is one of the drivers of the GDP. We are close to around 9 or 10%, and we're going to be close to around 20 to 25% of the GDP, given that 250 different industries and companies rely directly and indirectly on us, and then the services sector, and we're also the second largest employer after agriculture. So what we've asked for is to continually grow this industry. It's a make in India, make for India, and a homes for all, which is our Honorable Prime Minister's vision. We've asked for a few very simple things. One is the simplification of GST itself, like I told you. Second is to be able to simplify the holding norms, in the sense that when an home buyer rents a flat, he gets a set-off against his income tax. Yeah. But if the same home buyer goes and buys a home, he has a ceiling as to how much he can kind of, set off against his income. I think it'll be very, very a good move on the part of the Finance Ministry to allow for a purchaser of a home to get a huge relief with regards to his taxation. Why do we say this? Because indirectly the developer is paying a score of other taxes, including GST, including stamp duty for the state, including employment of people and the services that he provides. This will lead to a big fillip. Though income tax may come down a little bit, but this is a big fillip to the overall growth of the industry and thereby growth to the GDP as well.
Okay, that's the take coming in from Macrotech Developers, talking about their budget wish list from the Finance Minister this time around, representing the real estate sector, of course. But Jonathan, just coming back to the point that you were making about as to how consumption in India is is a theme that you believe in. A lot is happening there as well. Like we were just speaking with the previous speaker before you joined in, as to how the entire premiumization trend and urban consumption really has maxed out when it comes to valuations, at least. And rural is something which is really seeing a slow down, something that can be very well felt within what's happening in the staples category. What is your overall thought on the entire consumption play here?
So yeah, I think we pretty much agree. It's undoubtedly a fantastic longer term opportunity. But as your previous caller said, and as you just mentioned, a lot of the good news, if you like, about the opportunity is factored into some of the stock prices. However, I think the stock prices traditionally and for many years have traded on the expensive side. But these are compounding type companies, and over the longer term, if you can pick them up in a period of volatility when they've come off of it, it's generally paid off. So we're comfortable with the space. We understand there will be cyclical swings up and down between the urban consumption and rural consumption, but ultimately the direction of travel is what's important. And, clearly that, we do see rising consumption, premiumization ongoing as a story for India.
That's the take coming in on the consumption basket. But Naresh, this particular week has been decently well for all these telecom players, and specifically for the tower company. Indus Tower is one of those plays when just today we had the commentary coming in from Minister on the addition of the towers going ahead. Any stock within the telecom space that is still looking interesting to you? Because Bharti Airtel has done decently well. Indus Towers even today is holding up gains of almost 2%, and even Vodafone Idea, definitely a lot of news flow around as well, and the stock is now above that 8 odd mark. Okay, 9 odd mark at least. But any stock that is on your list or that still look attractive to you?
So it is Bharti Airtel, which has been consistent, has not been a stock which has corrected with the markets. The stock has held on above the 1550 mark, still just 10%, less than 10% from the highs. The stock has been consolidating for the last almost 1 month around that 1630 mark. That could break out about 1670, looks promising at current levels. The risk reward is good. This could be the first one which could hit a new all-time high in the basket. The second is Indus Towers, which has made a multiple bottom around this 320 and is on verge of a breakout about 370. This structure looks positive for a move back to 440 levels. So like Indus Towers one, and second would be Bharti Airtel.
Note, Naresh, let's have your BTST trades as well.
So looking at a bounce back trade in Coal India, which has corrected from 500 plus all the way down to 380s. Stop loss at 383, target price of 400. Second is a buy on Bharti Airtel, very close to a breakout point now. Stop loss at 1615, target price of 1670.
All right, that's the BTST idea. Okay, Bharti Airtel, there you go, Naresh. But Aditya, help us with your BTST ideas then.
I've got a couple of buy recommendations. Shrishti, the first one is Motherson Sumi stock has seen a significant correction from 210 odd levels, taken support at the neckline of a breakout, neckline of the trend line breakout. From there, it's bounced back. So for a target of 162, I'll be a buyer in Motherson Sumi for the stop loss at 145 on the downside. The second stock is BDL, Bharat Dynamics. The entire, as I mentioned, defense space is buzzing around, and I think BDL within that is looking very attractive to me. So at current levels, they're a buyer in the stock for a target of 1450 on the upside, a stop loss of 1200 on the downside.
All right, those are the two ideas coming in from Aditya. Bharat Dynamics, that stock is already up 6%, but still having confidence in that. And also, Motherson Sumi wiring is the other counter that I believe Aditya, all right, Samil, Samvardhana Motherson is the other counter that Aditya is looking at this point in time. But Jonathan, help us with your take on some of these beaten down sectors and probably where the valuation did become a bit of a challenge, and sectors like defense as well as railways. Of late, we have been seeing a lot of these announcements once again trickling in with respect to the new order flows, and everybody is just highlighting the kind of opportunity that lies ahead for these companies in terms of growth. But what's your take? Any of the sector or any play that you like at this point in time? Are you really looking into this theme again?
Yeah, I think what we find is we struggle. So defense, absolutely, that's a fascinating area. We can all see where spending is going, and obviously domestication of the defense industry in India is a massive push that's been ongoing for some time. The problem we've had is finding stocks that have a significant amount of exposure to the sector without other related or non-related businesses. That aren't necessarily SOEs and that are growing the business and also got a lot of runway. So it's an interesting area, but we've always struggled a little bit in finding counters in that particular space. That said, the broader market, you're quite right. I think since the indices have come off since the last quarter, where most of the market was looking quite pricey, we're beginning to see a few individual counters starting to look quite attractive again. We haven't done anything as of yet, but certainly valuations in certain pockets are beginning to look interesting again. And I think it's also quite interesting that India, there's a lot of money that flows between India and whether people like China or not. So even though the Chinese story is still a little bit doubted, India's been coming off. So I think we've seen foreign money coming out, and that has led to some pockets of value beginning to re-emerge.
Right. Okay. Jonathan, stay with us. A lot of earnings as well, and in the thick of those. So let me take it across to Anisha and find out what to anticipate from Wipro and Tech Mahindra now that Infosys also is out of the way. Anisha, what can we expect?
The street will be watching out for Wipro as well as Tech Mahindra, which come out with earnings later today. For Wipro, the expectation is that it's going to be in the middle of the range that they had given, because earlier, remember, the company had talked about a -2 to flat kind of performance. We're expecting that the revenue will be flat in terms of the rupee revenue, so that the number comes closer to 22,180 crore. In terms of the IT service revenue, in terms of dollar revenue, we're expecting a decline of around 1.6%. The number is expected around 2,620, while the constant currency is expected to see a decline of around 1%. The margins might be stable just around the 16.5% mark. 2 months of wage hike impact is going to be there, because the wage hike was actioned in September. So we'll see that, and that's the reason the margin is expected to come off to the levels of around 16.5%. Profitability is expected to be down by almost 7%. Overall, there will be cross-currency headwinds to the tune of 70 to 90 basis point, and maybe BFSI as well as Capco will remain soft. So that's something that we're watching out for. As far as Q4 is concerned, we're expecting the company to guide a growth of anywhere between +1 to -1%. Shifting focus quickly to Tech Mahindra, wherein we're expecting that the revenue will be up around 0.7% in terms of constant currency. Dollar revenue is expected to remain flat. As far as EBIT margin is concerned, we are expecting an expansion of 60 basis points, so that the number comes closer to 10.2%. That's on account of Project Fructifus that they have undertaken, Fortuous, I beg your pardon, that they've undertaken, and that's expected to improve the margins. Profitability is expected to come off, but last quarter there was a huge one of around 450 crores. So that's why it's not a very like-to-like comparison. The improving deal ramp-ups might offset some of the furloughs, but there will be a 100 basis point currency impact. So that's something to watch out for. Overall, from both the companies, the commentary regarding way forward, the Q4 as well as the FY26 expectations is something to watch out for.
Well, it's Wipro, Tech Mahindra, but guess what? Zomato as well is going to be declaring its numbers over the weekend, and all eyes surely on this one, especially given the volatility that you saw in the stock on Monday and how swiftly that got bought into that low of 220, still hovering around the 250 mark. Of course, it's off from its previous year peak, or rather 52-week highs of 300 thereabouts. But Snehi, tell us what to anticipate from earnings.
Expecting a decent set of numbers from Zomato for Q3. Let's take a look at what the earnings fine print could be. Now, on a consolidated sequential basis, revenue was seen at 5,382 crores compared to roughly 4,800 crores last quarter, which is up 12% on a quarter-on-quarter basis. EBITDA is seen at 266 crores compared to 226 crore, an uptick of roughly 18% on a sequential basis. Net profit is expected to grow 31% quarter-on-quarter, coming in at 230 crores compared to 176 crores in Q2. And EBITDA margin is seen improving only nominally to 4.9% compared to 4.7% sequentially. Now, here are some key expectations. The food delivery GOV is expected to grow at 6% sequentially. For the same metric for quick commerce is expected to be strong, coming in at 15% on a sequential basis. Blinkit is likely to post a contribution margin of 3.7%. And the sequential adjusted EBITDA margin as percentage of the GOV improvement is expected in food delivery and Blinkit as well. Now, here are some key factors to watch out for the days the numbers come out. Market share will be important to watch out for, the market share status in the food delivery as well as quick commerce business. The sequential monthly transacting users and order volume growth in both the food delivery and quick commerce business will be key to watch out for. Delivery charges expansion, if any of the company is undertaking, that will be important to watch out for, along with commentary on any platform fee hikes, if at all. Near-term EBITDA trajectory will be important, and lastly, the net dark store addition for Blinkit and the outlook for the entire quick commerce biz amid the rising competition is going to be some key commentary to watch out for. But well, yes, overall, we're expecting a very decent set of numbers from Zomato for Q3.
Decent set of numbers expected from Zomato, and the stock is also perked up in today's trading session just before the earnings. And talking about Tech Mahindra as well as Wipro, they are showing some bit of weakness, definitely yes, taking cues from the Infosys numbers. But apart from that, Jonathan, help us with your take on Zomato, given this recent correction. How are you looking at this particular play? Because till now, especially till the earnings that we have seen, there's a lot of excitement when Blinkit will start contributing into the earnings, and this time it's likely to post a contribution margin of 3.7%. Given the great opportunity that is lying ahead, but also the competition that is building up, what is your sense on Zomato, and do you like the stock at these levels?
Yeah, look, if I'm honest, it's not a stock that we've been looking at for some time. I think you make the point about competition. We struggle a little bit with the space, the lack of, a lot of these stocks have, the barriers to entry are fairly low. Clearly, branding is very important, but I think it's still, for us, the space is still a bit young. There's still too much competition that's coming in. And I think until we see the real emergence of winners, it's a space that we're stepping aside. We can find other, areas elsewhere which are a little bit more consolidated, and the winners are a little bit more obvious. So for the moment, it's we have no real views on Zomato or the broader internet space.
Interesting, Jonathan. Great to have you on the show. Aditya, Naresh, we'll let you guys go as well on that note.